All right, everybody, welcome back to the Culture Cage. I'm your host, Michael Clark, owner of Culture Shock Investments. And this episode, we're going to be talking about my projections for the economy in 2024. I'm not going to give you exact price points on when to buy and sell these particular companies. For that, you got to join the Discord group. But I'm going to go over my general feelings of what I see happening this year in the market based on what's unfolded so far last year and so far this year. All right. So, we all know about the Bitcoin crypto ETF. That's a major news catalyst for this year. That happened this past week. So, spot Bitcoin ETFs were approved. Clap it up for Bitcoin, everybody. It was a long time coming. A lot of people were waiting for this moment to happen, and it is now here. A lot of the times when there is that much anticipation on a move, it's usually priced in before the move happens, and then after the announcement is made, we have a pullback, which is what I anticipated was going to happen after the ETF was announced. And that's essentially what's happened. We had the ETF announced on the 11th. Bitcoin shot up to around 49,000. And today is the 15th. And it has pulled back to 42,000 already. So it's already pulled back $7,000 after the announcement. Now, I will give you guys a price point on this. I anticipate Bitcoin is going to pull back to at least 38,000 before it finds any kind of support and starts moving back up again. It could break down further than that, but I would say reanalyze around 37 to 38,000 and make a decision from there if you want to keep adding in or wait for further pullback. But yeah, so the ETFs, a lot of big ETFs dropped. Some interesting ticker symbols on those ETFs. Let me pull up my ticker symbols here for you now. They have one called HODL. That one, off the top of my head, it was interesting. It was an interesting choice of ticker symbol. It's good marketing, if you ask me. It's something that's definitely going to stand out. People are going to remember whenever they're thinking of, oh, what's that Bitcoin spot ETF I wanted to get into? HODL, that's one that's going to come to mind immediately. All right, let me see. We have, hold on, where is my, here it goes. So, ARK, we all know Kathy Wood from ARK Financial. She loves her some Bitcoin. She also loves Tesla as well. But they put out their own spot Bitcoin ETF called ARK-B. BlackRock has their ETF with IBIT. The fees on these are 0.25% per transaction with BlackRock. And that's how a lot of these companies plan on making money off of these spot Bitcoin ETFs. They're going to charge fees per transaction, per purchase, per sale. And that's essentially how they're going to make their money off of these accounts. So this is a good thing for these institutions because irregardless of the price of Bitcoin going up or down, they put themselves in a position to make money from fees. So it really doesn't matter to them which way the price goes as long as people are doing transactions using their spot Bitcoin ETF. So we're going to see a heavy load of spot Bitcoin ETF commercials during the Super Bowl, I'm sure. People are going to be dropping the bag to get those commercials up this year because, like I said, what's stopping you from going to Coinbase to buy your Bitcoin? What's stopping you from buying your Bitcoin directly, which is what I suggest you do. But if you have to go through one of these spot ETFs for some reason because of your job or you're setting something up for employees at your job to be able to invest in, then that's who they're marketing to. That's the business they're trying to win. So if they end up winning that business, they win all of these fees. So for BlackRock, like I said, it's 0.25% is their fees. We have Invesco, ticker symbol BTCO. They're going to have 0.39% fees. Grayscale, GBTC has by far the highest fees I've seen listed. But we also have to remember that they've been out the longest as far as a spot Bitcoin ETF or something on the market that represents that. GBTC has been trading on the market for a few years now. You've been able to buy them. So they may be ahead of the curve with those fee rates for, a particular reason they may be charging that rate. But they may come down as more competitors enter the market, so you may see that percentage come down. Hashdex, DEFI, DeFi. It's another catchy ticker symbol right there. People might just gravitate towards it just because their fee structure is 0.9%. You have Valkyrie, BRRR, Burr. That's another catchy ticker symbol there at 0.49%. Wisdom Tree is BTCW, 0.3% fees. Franklin is EZBC is the ticker symbol, which is another catchy one. EZBC, Easy Bitcoin. That's a pretty straightforward but catchy. 0.29% fees. Fidelity, FBTC at 0.25%. VanEck is the one that is HODL, HODL. They're at 0.25%. And Bitwise at BitB, BITB, is at 0.2% fees. That's structured as they put out their entire, I guess you would call it, white paper as to how they were structuring their ETF, how the fee structure was going to be. That's where these numbers were pulled from, that report there. All right, so those are the list of the ETFs coming out. You could choose to, like I said, gain exposure through those ETFs, or you could go ahead and buy the coin directly. I would suggest, watching crypto carefully because it's a very volatile market. Like I said, usually after news like this is executed, there's a pullback and a new support found in that market before it takes off again based off of this major change that's happened in the industry, which I don't really necessarily like because it's going to introduce a lot of institutional control into crypto. And crypto is essentially supposed to be decentralized, kind of a platform where it doesn't have a lot of institutional or governmental control. It kind of operates independently, which gives it its validity because it's not tied to a particular industry, company, or government. There's usually no kind of hidden agenda behind it. It's a public forum that everybody is able to see the transactions on and invest in via the blockchain. But with all these companies and ETFs coming out, we're going to see more regulations and laws placed around it. They say that there's a stable coin law coming into effect, which I don't blame them from doing, especially what you see what happened with all the stable coins that were out there previously that crumbled because they lost stability. Their structure was just all off. They were using other cryptos to support their value instead of just using the US dollar. So it got real messy, convoluted, and a lot of those coins just crumbled. So we don't want to see that happening. Law should definitely be in place for that. Ultimately, at the end of the day, irregardless of what's happening, adoption is being had and growth is going to be seen in this industry. Now, it's not going to be perfect and pretty and all decentralized as we may have initially wanted, but adoption and growth is coming to the industry. So I do see Bitcoin and Ethereum benefiting from that adoption period. BlackRock, one of the biggest spot ETF names out there, they were talking about their Ethereum spot ETF coming up next. Now that the Bitcoin spot ETF is cleared, that clears the way for Ethereum spot ETFs to come out and be able to be purchased on the market. Like I said, big money doesn't want to be left out of any party, and this is the institution's way of getting into the industry on a large scale. They have to have it approved through their regulatory guidelines. Have to incorporate crypto in some kind of way. So that's what took all this time to happen. It's not easy to get laws passed and regulations changed, but when you have a lot of money and influence in a certain area, the change is going to come. And that's the point we're at right now. Now, enough of crypto. Let's go on to Starlink. Starlink is something I think we're going to see a lot more of in 2024. We're going to hear that name a lot more often because Starlink, if you're not aware, is Elon Musk's satellite system where he's pretty much trying to bridge communication with satellite communication. So if you have a cell phone and you're in the middle of the jungle somewhere or in the middle of the desert, you'll still be able to get a cell phone signal because of these Starlink satellites that are up there. You'll be able to get not only cell phone but also internet service in very remote areas. If this is accomplished successfully, it's going to drastically change the global market because of all the people that are now going to be able to be included in this global market due to them being having access to reliable internet and phone service. We take it for granted in America having strong internet and phone service at all times, but a lot of places around the world don't even have consistent internet service. So just that in itself is going to expand the market of competitiveness, of innovation. That's going to allow a lot more people to be participating in the global economy. So I think that's going to be exciting news. They already have 2.3 million global customers, from what I understand. They just recently were able to send a text message via a T-Mobile phone. I believe that's how it went. They were able to purchase a phone off the shelf and connect to one of their Starlink satellite systems and send a text message to another cell phone. That was the first time they were able to do that, and they did it in a I guess what you will call a dead zone for T-Mobile, where most T-Mobile customers weren't getting signal. They were able to send that text message via Starlink. So that's where this program is going to come in and help be a filler. It's going to fill up those dead zones and it's going to reach out to those remote areas and give them access. Major key. Now, does that really affect the price of Tesla? Some may ask, because Elon Musk is the owner of Tesla. I don't think they're correlated, but of course, if you invent a particular system and you're the owner, it gives you the autonomy to integrate it seamlessly into a lot of your other inventions. So I could see Starlink becoming part of the Tesla vehicle in a way where now that's how the Teslas receive their information and share information across the Tesla network. That is something I could see coming about, and that will raise the value of Tesla. But Starlink, I believe, is going to be traded independently. It's not on the public market yet. You can't buy Starlink, but I do believe they're going to come out with their own ticker symbol that you're going to be able to own publicly and trade. Now, some issues with Tesla. Tesla's having issues with the vehicle because the automated driving feature is causing too many accidents, and they had to do a recall because of some other malfunctioning features with the vehicle. That's affecting the stock price heavily. Tesla, let's pull up the Tesla stock over here. Tesla is down right now. Let's go over their last couple weeks. Tesla, I know, has dropped over 10% for sure. Now, let's go back. Let's measure it out from... We're going to measure it from around July of 2023 till today. From July until today, they're down around 23%, which is a big pullback for a company like Tesla. And a lot of it has to do with this malfunctioning and these recalls coming into play. And also, they have a strong competitor coming in with BYD. BYD is another electric vehicle manufacturer in China. They're a Chinese-based company, and they just overtook Tesla's as the top EV seller globally this year. So Tesla is no longer the dominant EV seller in the market. BYD has overtaken them as the top seller. Now, when this recall situation bypasses and they fix what they have to fix and they come back out, is it a possibility they regain dominance? It is, but the EV market is going to become more and more convoluted. So I see just more competition there. They're going to be able to differentiate themselves when Starlink takes off, and they may be able to incorporate that technology into the EV because that'll be something no one else has. But Tesla does hold the advantage because the U.S. government has a deal with them as far as charging stations being used throughout the United States. They have the most reliable charging stations. So they have a contract with the United States governments to install charging stations all across the country. They also have partnerships with a company like Ford to help install charging stations with them, because other companies need this reliability at these charging stations. They need to make sure chargers are out here that are going to charge their vehicles fast and efficiently. Because if that's not the case, people are going to veer away from EVs because they're not very convenient. Now, let's move on to some global tensions here. 2024, we have a lot of tension globally. We have some, well, we all know Russia and Ukraine has been going on since 2022, pretty much, early 2023. Now we have Gaza and Israel in a fight. And now we have attacks in the Red Sea as well on imports and exports from Yemen. So that's going to impact the supply chain if they keep attacking these cruise ships that are trying to export and import goods. The Red Sea is used to import and export a lot of goods around the world. So if there is tension in those seas and it's not safe for ships to travel, we're going to start to see the price of things go back up, which is counterproductive to inflation. But it will be caused by a particular action, not just, I guess, not caused by the inflated dollar itself. It will be caused by actual wartime action. Similar to before when the supply chains were impacted and we had to deal with inflation with gas prices, so on and so forth, because oil wasn't able to get through so easily. That's what's going to happen again to a degree. Now, how bad is this going to happen? We don't know. But that's something that we got to keep an eye out for in 2024 is the tensions over there by the Red Sea. Because you have the United States involved in trying to protect ships now as well. And it goes to show how important these imports and exports are if we are willing to start putting warships out there to protect the retail ships trying to pass through. Now, we also have wartime in the Congo. You know, we know the situation with cobalt and how essential cobalt is in producing a lot of this technology that we use today, from our cell phones to our laptops to the AI chips that are coming out. Cobalt is an essential part of that production chain. So we have high tensions in the Congo as well. That's causing a lot of issues with I say the production chain for these AI chips, and this humanitarian issue as well is coming up around it. And if this gains more traction behind it and more attention, that can stall the process of the AI industry, which has been ready to go full speed ahead at this point, because the AI chips need that cobalt to be produced. So if there's a humanitarian intervention and a lot of this cobalt that's being exported for these low prices now ends up having to be paid a fair price for, or the exportation of it just stops or slows down, going to drastically increase the cost of producing these products that are in the pipeline, and it's going to disrupt the economy. But I think that disruption is needed because what's going on over there is an atrocity, and they need to find a more humanitarian way to extract the cobalt from the Congo and make sure those people over there doing the work are getting paid fair labor and fair wages, and allowing them to prosper from having this resource in their land over there that we need so badly to create everything we have going on. Compensate the people fairly is what I say. And instead, what they're doing is they're trying to buy them for low prices, and then they're going in and striking terror by paying third-party, privatized, militarized groups to go in there and terrorize the locals who are working in these minefields or trying to fight against the inhumane treatment of the miners. So that's what's causing a lot of those tensions in the Congo. Now we have China now threatening again to take Taiwan, and doing so pretty aggressively. They're pretty much saying that this is going to happen. And Taiwan is one of the top semiconductor producers in the world. I think this is a strategic wartime move by China to take Taiwan and become more dominant in the field of chip production. leaving the rest of the world pretty much at their mercy when it comes to level of production of chips, how fast chips are being produced, how much is being traded in these contracts. So China is aggressively going to go after Taiwan, I feel, because that is a heavy, heavy part of where the economy is going forward with the chip production. We have a lot of factories being produced over here in the United States to try to counter that. We're getting ahead of that movement by, spending billions of dollars in the CHIPS Act to try to have these chip factories produced here in America so we can produce chips as well, and we won't have so much dependence on Taiwan and other countries for our chip production. But those projects take years to complete. These machines are not easy to make, and that was implemented a few years ago and is still playing out as far as construction of these facilities. I haven't heard of any major chip facility being activated and put into use yet here in the United States. I think they're still in production. Now, innovations. What are some cool, innovative things I see coming for 2024? I see Twitter, or X as it's called now, is launching peer-to-peer payments. So that's going to allow you to do payments from person to person on Twitter, similar how you do a Cash App, but I'll just be able to link my bank account to my Twitter account and transfer money to people as I need to, who are my friends on Twitter. I could see that kind of picking up traction and picking up popularity because of its level of convenience. As long as it's something that's really easy to do, I could see people starting to send money to each other on X. And as long as it transfers directly to your bank account, there's no issues there, and the fees aren't crazy. I can see people doing that. And they're going to incorporate Bitcoin and blockchain into this system as well. So that's going to also be something I could see increasing the usage of crypto. People are going to be transacting on X using crypto and peer-to-peer payments now. So if they're able to do so where I'm able to send you Bitcoin and you receive it as cash, or I'm able to send you any crypto token and it comes up into your account as cash, or you could choose to take it as that token. If they find a way to make it seamlessly transition like that, or currencies are able to seamlessly exchange like that over the platform, then that's going to be major because of how many people are already on Twitter. I know we were just talking about commodities like cobalt out there in the Congo. Let's talk about copper. Copper, they say, is set to soar more than 75% over the next 2 years amid mining supply disruptions, like we just said, and higher demand for metal fueled by the push for renewable energy. That's an article from CNBC. And that's what we were just talking about, how a lot of these global tensions and those attacks in the Red Sea, if these continue, the value and cost of these raw materials are going to skyrocket. So looking in commodities, and the commodity market is someplace I'm going to be looking heavy this year for some opportunity, especially within cobalt, copper, gold, silver. Those commodities, I believe, are always going to hold and retain value, and we could see a decent jump in the value of those commodities this year. The EV and clean energy, renewable energy push is major. Copper is a big part of producing a lot of those renewable energy devices and batteries. So we're going to see a heavy influx of copper production and extraction in the coming years in order to meet the demand that's going to be there. Detroit has done something very interesting. They put in EV charging lanes. I like that idea. So you could drive and have your car charging while it's driving. So imagine being able to gas your car while driving it on the highway at the same time. Pretty dope. So there's going to be these special lanes that they have that you're able to drive your car over. They already have a few installed out there. And while you're driving in that lane, your car is going to be charging at the same time. Pretty dope idea. But that is going to be something that I feel like is going to go nationwide very quickly, especially if it's proven to be efficient and helpful in the supply chain market, which is where I see it having the heaviest impact outside of retail use and drivers like me and you, everyday drivers using it. I see the trucking industry taking advantage of something like this very quickly and pushing for it to get installed so it becomes more of a, I guess, 24/7 industry than it already is. Because now, if you incorporate EV charging lanes, and these are designated lanes for EV charging, or they may have an EV charging truck lane. So if you have an EV charging truck lane and trucks don't ever have to stop to get gas or fuel up anymore, and they could just drive on these lanes from one state all the way across the country, these are going to be optimized routes for our logistics in this country. That could help improve our logistical system drastically. Will that impact truck drivers? I believe so, because these routes are going to be pretty straightforward back and forth, and I think the automated driving capabilities are good enough to accomplish that task at least. Where you have one straight track, you're going this way and then coming back this way. They don't have to do too much turning, stopping, anticipation. They could just stay in their lane, go one direction and come back the other, similar to how trains move and operate, you know. So that is going to be a very, very interesting innovation that we see expanding through our highway systems. It's going to be a lot of construction everywhere to try to implant those charging roads. Then you have some breaking news for you into 2024. Early 2024, we had Microsoft passing Apple in market cap. Apple and Microsoft are always the two tech behemoths going back and forth at it for market dominance. But Microsoft has 2.89 trillion market cap now, while Apple is at 2.87 trillion, and that's after a 3% pullback. Apple has pulled back to 2.87 trillion dollars in market cap. A lot of that has to do with lack of innovation in the Apple space. You know, they did come out with the Apple Pro glasses, but those are they're similar to something that Facebook already came out with the Vision Pro. And on top of that, they're at a higher price point. So because it's an Apple product, it costs more. Of course, they state that it has a lot more capabilities than the Meta Pro Quest. But at the same time, I don't think technology as a whole has even evolved to the stage of augmented reality and virtual reality yet. There's not enough adaptation for that industry for those glasses to be seen as such a major innovation. Now, when it comes to Microsoft, their innovation came through AI and acquiring OpenAI ChatGPT last year. And that market has been showing immediate use case for not only retail users, but for businesses and institutions. So that's why I see them expanding at a much faster rate right now than Apple, who doesn't really have any ownership or proprietary ownership over any unique technology anymore. So AI is pretty much in the realm of Microsoft. Microsoft seems to be dominating the AI market by owning OpenAI, and Apple seems to be struggling, and other tech companies seem to be struggling trying to advance rapidly and catch up to Microsoft in terms of what they're capable of doing with OpenAI and ChatGPT and large language models. So you see a lot of that being copied through these other tech companies, but it's a game of catch up at this point. Microsoft is in the league, which is why they had a 2.89 trillion market cap, which I could see going over 3 trillion by the end of this year easily. New York, talking about OpenAI, the New York Times sued OpenAI over copyright infringement. So because OpenAI is a large language model, it pulls text and information from a lot of different sources online. And I guess the New York Times started realizing that it was pulling a lot of information from its own site, its own publications and articles, and it was applying it and using it in a way where it was not giving credit back to the New York Times for the information. So now they're trying to sue them for copyright infringement. That could open up a door of issues for OpenAI because of how they pull information. They may have to go through more legality to be used on a mass scale unless they want to keep getting sued like this by large institutions in which they pull information from. It's different when it's getting information from an individual like you and me, and we click I agree to the terms and services. But when it's scouring the internet and it's going through all these websites and publications to get information, not all of these places have agreed to let ChatGPT just freely use their information. It is public information, but I'm guessing that because ChatGPT is not sourcing it, it's causing an issue. Another form of breaking news for 2024 that people may not be aware of is the gaming industry. AI, Microsoft, chips, cobalt, copper, this all ties together. I don't know if you're catching the theme here and seeing what's happening, but the gaming industry is set to, well, it already earns more than the film and music industry combined. In 2023, it did. So I can see that continuing to expand with the glasses. When we talk about the Meta Quest and the Apple Pros, I could see video gaming expanding into that realm and that field, giving more value to those pieces of equipment and those tools and those companies. But the gaming industry itself is a behemoth. It's going to continue to grow at a rapid rate, and with the new technologies we have coming out, it's just going to grow more expansive. It's just going to be more capabilities that you're going to be able to do via gaming. There's going to be more that you can do via, I guess, virtual and augmented reality in order to train and teach people how to do things when it comes to job training or on-the-job training. So I see a lot of exciting innovation coming in the gaming space. It's one of my favorite spaces to watch, along with the movie industry, because I feel like in those two industries you get a little flash glimpse of the future a lot of the times with what's being produced and created. So gaming industry, make sure you pay attention to gaming companies out there like Take-Two Interactive, you got Activision. Microsoft is also part of gaming. Don't forget that they have the Xbox ecosystem, the whole Microsoft Play Store. And another quick prediction for 2024. I don't know if this happens this year, but I do see the gaming industry kind of morphing into a conglomerate where you're getting online, and regardless of what device I'm getting on, my laptop, my Meta Quest Pro, my Vision glasses, my Xbox, my PlayStation, my Nintendo Switch, all games are going to be intertwined into one network in which we are all going to be able to play with each other and connect with each other on one network. So right now, Xbox players play with Xbox players, PlayStation play with PlayStation. It's going to be a network where all players are playing with all players. As long as we have the same game and we're on the same game, we're going to be able to interact with each other. That's where I see the gaming industry going, and that's going to cause crazy expansion in that market, along with the secondary market that comes along with gaming, such as the perks and all the VC you have to buy when playing games and all the extras that come along with games now. Because the games are just used to come with everything that you needed for the game. You paid $70, you had everything you needed for the game on the game, and if you needed to download it, it was free. Now the games are free, and if you want to have access to certain things within the games, you have to pay. And that's the structure, the pay structure that a lot of games are following, and subscriber structure that a lot of games are following in order to increase their revenue. And the most popular games are going to benefit the most, of course. But the games that are able to immerse you inside of that feel for longer periods of time via these new technology devices like the Vision Pro and augmented reality and virtual reality, the ones that are able to adapt those technologies the fastest are going to be the ones that I feel like end up being the most successful early on. All right, so that is my projections for 2024 for you guys. Like I said, if you want particular prices on companies and industries, I do provide that in my Discord. So join the Discord community, the Culture Shock Investment Discord, and I'll give you all the information you need to navigate this market and help you through step by step. Thank you for joining me here in the Culture Cave for the 2024 market review or market projection and 2023 market review. I will be on again next week, hopefully with some guests, and we'll discuss some more topics on the economy, black culture, and the black economy to be specific. All right, guys. Thank you. See you next time.